Would you say the same about pharma, or is there's something changing fundamentally for pharma? It's no longer a short covering bounce. I was looking at some of the delivery buying in some of these large cap pharma names, Sun Pharma, Aurobindo, Lupin, and there's been some aggressive fund buying in some of these stocks.
No, fund buying by itself means nothing much. I mean, funds make all kinds of investments. I mean, I remember PSU Bank, many funds have loved over the years, and at every fall there were supposed to be great buys and all that. I mean, let's not ascribe any great value merit to that. Again, pharma is not something I'm convinced about, that the worst is over, or you don't know when the next hit comes, whether growth is going to be back in any reasonable form. But it has fallen a lot, so there is nothing to say why it can't rally. I mean, it's very simple.
Fair enough. There's an interesting dichotomy in the market right now, Shankar. Yesterday, for example, Bajaj Finance made a new all-time high. Jubilant Foodworks will make a new high. Quietly, Britannia, Nestle, every day moving to new all-time highs. Now, we all know Indian consumption story is great, but are we building any kind of bubbles here, or is this going to be that kind of market where the expensive stocks will keep getting more expensive?
Yeah, I mean, 100%. India has always been an expensive market for quality. So quality defined as good management, so more importantly quality defined as good ratios. I mean, so your Britannias of the world or Levers of the world, I mean, they will have periods of underperformance, but if you look at a large snapshot of a 25-30 year period, they will almost always beat the markets. And in a bear market, the good thing is they don't fall much. They at least they just kind of become flat because they don't have leverage. So, you know, from a, let's say you were an investor who didn't really follow the markets as closely you and I do. I mean, you will just buy a basket of them and forget about it. And 10, 20 years later, as a basket, you will be way ahead of the markets. Absolutely.
Exactly. The other risk that the market is talking about, and we've seen precursor to that, for example, on the Gujarat outcome day or on the Karnataka verdict day, the market is going to be very reactive to what's happening with politics. Though, as you pointed out in the past, in coalitions, it's not that we haven't done too badly, but is that a reality that we have to live with, that 2019 perhaps could be a bit of a coalition government, and do you think that would lead to a bit of a correction in the market?
Well, I mean, if it is a coalition which is a non-BJP coalition, okay, then be prepared for, you know, a one bad day in the market. Okay. But we've seen that happen. So in 2004, we saw that happen. I don't pay any attention to the market's reactions on these kind of days. That's an absolute waste of time. So in 2004, if somebody had been smart and had bought on that day or even the next day, you made a killing for the next 4 or 5 years.
Exactly.
On the other hand, 2009, you got a 20% upcycle, right?
And that was the high for some time.
Correct, for some time. Yes. For the same government, it's identical government, except they had like 40, 50 more seats. Yes. So, I mean, the market is a very disloyal bedfellow. Okay, let's put it this way. It is a very promiscuous thing. It is not faithful. So, it will sleep with anybody who promises some good returns. So, markets thought that Manmohan Singh did a great job in UPA 1, so we'll give you 20% up. And it had thought Atal Bihari was great and his going out merited 10% down. Here the market might feel the current regime merits a 10% down if it goes out. Or if it comes back but weakened, let's put it this way, it will still go down. Because then the market will then, say that, look, they will not get a free hand in decision making and allies will have too much say, blah, 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 all that. My view is you have to look past all that. And if you are sitting on a bit of cash, and I would think that you should stay a little liquid going into it, for sure. Okay. Because I think in either scenario, whichever government comes, I don't think a majority is on the cards. Okay, that's very clear. There will be a coalition, whichever side manages to cobble it. In either event, you will see a down day, a significant down day. I think you should be liquid.
Okay. You have not liked banks. As a basic business, you said that it's a horrible business. But of course, in the past, you've come out with gems like HDFC Bank and I think IndusInd Bank.
Yes,
was it? When you had that nice analogy about it being the next big thing, right? We've seen big move once again in some of these good ones like Kotak, IndusInd, HDFC Bank. Though HDFC Bank has cooled off a bit after that whole FI, I think. PSU banks, on the other hand, keep making new lows, except for an SBI. Do you think there's a value here? I know you don't have to buy, but for those compulsive investors, is this good time to chase some of the PSU banks?
I mean, people have looked at Bhushan as a kind of a bellwether indicator of how much recoveries the banks can make, and I think that's absolutely misplaced because
Bhushan had a great asset.
Great sector.
Yeah.
Great asset is only because sector has turned. If it was that good a business, it ought not to have gone bust in the first place, right?
Exactly.
That's what I laugh when people tell me steel is great. I said, boss, if steel is so great, why did it have to go bust? It's just that the cycle turned. And you're lucky that the cycle turned in the right time. If the cycle had been same as 2015, these assets would have not gone. Forget about going at a haircut. So Bhushan is not any indicator of what these banks will realize on the broad basket of NPLs which have gone into NCLT.
Okay.
I think you're going to have very poor realizations. Okay.
Okay.
And I think the other problem with banks, and this I can tell you based on conversations, is that given the whole fear psychosis that banks have undergone in the last couple of years, a year at least, when the CBI has got into the act, and even for loans which you gave in good faith, but that can go bad. Bank officials are sitting in the CBI office and getting interrogated. That has created a fear psychosis, where banks are scared to lend. Number one, number two, they're scared to settle. Okay, so whatever is has gone bad. You want to sit down and say, all right, so let's do a deal. Let's figure it out. But if everything gets pushed to the NCLT, the realizations are going to be a lot lower than a settlement prior to going to the NCLT. You see, that's the strange thing. But banks, in many cases, will say, look, I don't want to take a chance of doing a negotiation. Let's go to NCLT. Even if I get 5 cents to the dollar, at least I will not have CBI on my back when I retire. That is problematic. Because when you create a culture of fear, because ultimately banking is not a risk-free business, boss. Yeah. There is risk. So you have to take some risk. So if you can't take risk, then what happens now, why the private sector banks are doing, particularly in this current last 4-5 months, is PSU banks won't lend. Because many of them are under PCA, the others not under PCA are not willing to lend. So the credit market will move towards the private sector. I mean, that's the hope. So companies that can't get capital from PSUs will go to the private sector. Okay? So that is the reason why you've seen a bump up in the last few months in the private sector banks, excluding ICICI Axis, which have had problems of their own, but the non-problematic ones, let's put it, because there also now you have a sort of double basket. So the non-problematic ones are, at least market is betting that, look, the credit market is broken. It will move to the private sector banks. We'll see how that goes. My view is a lot of infra assets or greenfield assets, let's put it this way, whether it's a steel plant or a road or whatever, will not be banked by the private sector banks. There is no risk-taking appetite that these banks have to do greenfield investments. They will not do it, no way.
Okay, so Shankar, so for those watching this show, what's the big call for 2018? Stay invested, perhaps in good quality, and then some small caps, and keep some cash. What would be your big call right now?
No, my view is it's too early to go into cash. I think there is still, markets are okay. You're not looking at any, we already seen a correction. I don't see anything incrementally which will be any more damaging. I think more or less you're done with. In fact, even prior to the budget, I was expecting the market to have a first 6 months which was going to be rough, because of the fact that the last 6 months of 2017 were very, very good after that July-August correction. So that's more or less played out. I think it's a good time to be buying if you're not bought already. But you should get light, when, and, we don't know when the elections happen. That's again, it's a big question mark, right? Yeah. But I think a couple of months ahead of that, you should be liquid. Okay. 100%.
Okay, so since you said light, let's end on a light note. A nice Mohammad Rafi song.
You should have forewarned me. I would have come prepared.
I thought you were such a big Mohammad Rafi fan that
there are so many.
Yeah, anyone that comes to your mind, just one, just for our viewers.
वो जब याद आए, बहुत याद आए, वो जब याद आए, बहुत याद आए, गमे जिंदगी के अंधेरे में हमने चरागे मोहब्बत जलाए बुझाए, वो जब याद आए बहुत याद आए.
Superb, Shankar. Thanks a lot for being
Sure.
a sport always, and thanks a lot for taking time out for us. Thank you so much. Thank you.